Welcome to another episode. Today we have Eric Parker, who is the founder of Giddy, the self-custody recoverable crypto wallet that connects individuals to passive income earning opportunities. Giddy allows you to buy, hold, send, and earn crypto all from one easy-to-use mobile app. Excited to have you in. Welcome, Eric.
Yeah, thanks a ton for having me.
Yeah.
Co-founder, by the way. There's a couple of us.
Co-founder. Okay.
Yeah.
Thank you for clarifying. Yeah,
all good.
And I always try to distinguish that. So thank you for clarifying.
There's some debate around whether co was even needed.
Right.
There's a couple people I've talked to in the past who are just like, if you're a founder, you're a founder. It's all good. But
yeah.
I was, there's a handful of people at the beginning of the company that also, deserve credit.
Yeah, absolutely. No, good. Yeah. That's all good. Thanks for clarifying. So, Eric, one of the first things I like to ask my guests is to talk a little bit about your upbringing. So, you're an entrepreneur, you're building this company, but maybe talk a little about your childhood or teenage years or anything that influenced you to be who you are today.
Yeah, sure. Love it. So, my dad was military for most of his career, so we moved around kind of a lot. I'm the last of 6 kids. So by the time I came around, a lot of the moving was already done, but I was born in England, and then we came over to, if I'm remembering this right, New England. We kind of moved over and then ended up in Utah. So Arizona and Utah is where I grew up for the most part, but there's a decent amount of like relocating, changed schools a bunch. So I think through that, one of those things where the constant is change, right? You have to get comfortable with new situations and meeting new people and just being comfortable, right? So, moved around a lot. Did a bunch of sports in school, high school, football, basketball, track. Did all the different AP classes and whatnot. I've just always been busy. Got to find something interesting to do. There's a lot of stuff that is interesting. So I've just kind of part of it is probably a little bit of ADHD, but like I've always found things that I like and get obsessed with and kind of latch onto and then, do that for a minute and move on to the next. So music is a big part of that. So I play guitar and bass. I was in some bands in high school. It's just kind of a hobby now. I'm still as good as I was when I was like 17. I've always just been, curious about stuff. I've always been busy. My upbringing, there's plenty of change. The constants, the things that I could kind of control, I tried to, obviously, but I think you have to be comfortable with if you're going to grow up like I did, you have to be comfortable, getting comfortable in new situations pretty quickly.
Yeah, I love it. I think change is definitely a constant, and being able to adapt is definitely a constant as well. And being an entrepreneur, and things don't always go as planned. So I think that's great. So I saw you went to BYU. I'm always curious to hear people's take on college. Some folks that I sit down with are like, I didn't even need it. I shouldn't have ever gone. It was a waste of time. But some people are like, no, it was an amazing experience. And so what were your thoughts and how was your experience at BYU?
Man, all of the above. I'd be curious to know where I fit in with the people who have a certain number of credits, but no degree. I didn't actually finish.
Got it.
I was in college for, over 4 years, something like 130 or 160 credits. I couldn't even tell you.
Yeah, like enough to kind of graduate, but maybe not checking all the boxes or whatever.
Yeah, so enough for like a minor in computer science, math, chemistry.
Yeah.
I actually, when I started, I was in the orchestra. I was playing upright bass. This is something that carried over from high school.
Sure.
I actually had a scholarship available to play upright bass at the U, but decided to go to BYU instead. It just, felt like the thing to do. Mm-hmm. So, I did a lot of stuff. I started out as electrical engineering and then went over to information systems. I couldn't get into the program, which is kind of hilarious in some ways. And then I did computer science, and then I did, information technology. And then like throughout all of that, I just kind of got interested in programming for the most part, but specifically for like mobile apps, right? So 2008, 2009, the Apple releases their app store. And man, if you have an app on the app store, like you're actually making some pretty good money. Like the simplest, dumbest apps didn't exist yet. So the very first people who ever did a calendar app or a flashlight or an email notifier or whatever, like they're making pretty good business. So I got interested in that whole field kind of because of the opportunity. Like if you can just crack that nut, if you can figure out how to get an app on the App Store, like you're doing pretty good. So with computer science and math and all that, I kind of got the fundamental underlying skill set to start doing app development. And then like the reason I didn't finish was at the time MX was Money Desktop, right? They had that office down there at the River was in Provo. Mm-hmm. And I got what would you call it? Kind of an internship. It was paid. It was like a part-time job or whatever. So I was working there and just kind of wanted to make the leap. I'm just thinking to myself, like, I have to do another year of school. I'm going to have to take out this loan, pay this much money, or I could go work at this company full time, make a decent salary, and like really start getting some good experience. So yeah, college was looking back, like if I could distill all those experiences and like tell my previous self what to do, college is an amazing place to meet people who are on a similar trajectory to you. It's the best place to network. And of course, meeting people and networking for the rest of your life is a super, super, super important skill. But those formative years where everyone is like dreaming and has a lot of potential, you have no clue who is going to be the next, whatever, Steve Jobs or what have you. And turns out a lot of those people were at BYU. And turns out like I've kept friends and connections with some of those folks. And of course, you meet new people along the way. So it's, kind of the question of like, what even is it? Is it worth doing? Is it worthwhile? I think absolutely yes. There's a whole discussion to be had about how much it costs and the inflation of like tuition and all that. Totally different train of thought, but absolutely yes. Like you have to go at the very least to meet other people who have similar interests or on a similar trajectory. There's some hard skills that you'll learn. Math and computer science and all that kind of stuff. Like you can really set a solid foundation for the rest of your life by learning how to speak the same language as other people. That being said, the really, really important lessons come from doing. They come from building things. Like all throughout college, I always was working on something. And for the last couple of years, it usually was like an iOS app. Mm-hmm. But it's a combination of all those things that really give you the skills that you need to succeed in life.
Yeah, I think that's a great way to sum it up. And while you were there, it sounds like you'd discovered kind of the App Store, this app development. You were studying information technology, and then you ended up going to work for MX. So when you were there, was there any thought like I want to be an entrepreneur, like that's the end game, or was it like, hey, I'm going to go find the best job that I can and learn and understand how to develop apps or do something down the road? What was kind of your thought between career, entrepreneur, deciding on your path?
Yeah, it's a really good question. The thing I didn't understand about myself is that I was totally trying to do the entrepreneur thing the entire time. I didn't really know what to call it. I didn't really have the, I guess, awareness or whatever to be able to put that interest and that skill set into this particular bucket. I was absolutely just trying to get like a really good job. And also at the time, if you're good at programming, like, yeah, you can have a dang good career. There's people going to Apple and Google and wherever and having success relative to like big exits, from other people who are doing entrepreneurship. Yeah. Like I said, I've always been a tinkerer. There's always some problem I'm thinking about and wanting to solve in a specific way. Usually is with technology. Had like looking back, I can see now that entrepreneurship always was the path, but I definitely was aiming for just get a good job, right? And so another thing I kind of wish I understood back then is getting a good job, getting some good experience is an amazing, amazing stepping stone to this path of being an entrepreneur and starting something, right? I think especially in the technology world, there's so many things you need to know about a tech company. And you're going to get a crash course if you join a startup. You wear a lot of hats. You're going to be working with other people who they might not even know how entrepreneurial they are, but you're meeting other people with those similar interests and skill sets. So, and it's kind of a whole other topic. Like, how do you get from here to there? I think that there's a couple of buckets of people ranging from like the luckiest to, just grinding it out. You get people like, I'm going to forget his name. The guy who started Snapchat.
Oh man.
Yeah. You know what I'm talking about.
Yeah,
Evan Spiegel.
Yes.
So I consider that story as like winning the lottery. He had an idea, he executed, they made a good app, they made a good product. But there's so many other factors that have to be precisely correct for like your first startup to be a multi-billion-dollar company. It's really, really, really not common. People look at, you know, Zuckerberg and Spiegel and these other kind of success stories and think like, oh yeah, great. I'll try something once and I'll succeed. And if they don't succeed, if they have that frame of mind, you might end up not trying again. A lot of people don't understand or realize that like, dude, it's like your 20th or 30th company or venture that you eventually get right. I think there's a lot of reasons for that, so kind of bringing it full circle is, I didn't really realize that I wanted to do the entrepreneurial thing. I kept calling it something else. I kept thinking that it's just less risky to go get a job or whatever. But you know, where I sit right now, I absolutely needed those 10 or so years of having a career and just being in the field to get the skill sets and understanding that I have now, to, you know, start a company and, you know, try to get traction and all that.
Yeah, it's great advice, and I agree wholeheartedly. I think I mentioned before we started recording, I came out of BYU and started working, right? Just, you know, in a job, but the knowledge you gain working with peers, seeing it grow, and just kind of boots on the ground, it really sets you up to be able to launch yourself into your own platform at, you know, whenever you feel ready. So yeah. Talk us through your early career, Eric. You know, 10 years you started MX. As you were going through it, what were some of the things you were learning? You know, did you have any ideas that came to mind while you were there? Like, I want to create this or do this. I mean, what was the most valuable part of that 10-year time where you were kind of, I mean, I see you're at Advanced MD, Event Board, Simple Next. I mean, several, you know, great companies. So yeah, maybe talk us through some of those experiences.
Yeah. Money Desktop was one of the first experiences that I had being surrounded by people who were just excellent. Brandon DeWitt hired me. You know, we went out and had lunch with him, and it was a fascinating experience because we didn't really do a lot of like coding. He just wanted to see like what's inside you. What do you want? What are you after? And for the most part was looking for people who were hungry and had some sort of motivation and kind of had aligned interests. And he would give almost anybody a shot who showed that level of, you know, interest. And what he ended up creating was an environment where we had, you know, a handful of dozen engineers and other folks who were just very talented, very, very hungry to get something done. I was surrounded by people who had the skill sets, the interests, that they had earned that I didn't really realize that I, you know, needed also at the time. Like I was so focused on, I don't know, kind of like punching above my weight class. I really, really wanted to show that I could be this senior engineer and do all these things that were going to really move the needle for the company in a really, really big way, which, and you know, it was my very first job. I didn't really have the understanding that I needed of my role at the time really should have been just soak it in, just find people who have interesting things going on. If they have something I could help with, if I could help with their bandwidth or help with some research or do some kind of whatever kind of task I could do to get in with someone who had an interesting project, that really was the right thing for me to do at the time. I was, like I said, really, really focused on doing things that I wasn't really capable of doing. Like I was whatever. There's a specific project at Money Desktop. I was trying to set up the system to automatically create like basically like custom 2D graphics that were totally outside of like the typical UI SDK whatever. Really, really complicated stuff. I made some progress and then eventually found another job before I kind of like finished that thing. But so the most valuable stuff, the experiences that I gained from Money Desktop and Advanced MD and Team and Simple Nexus. I was at Walmart too. A lot of it has to do with, it's like learning how to learn, right? It's the skill set of figuring out how to figure out problems, because everything you do is unique. Everything you do is like, there's usually patterns that you can match, but every problem that you have to solve has its own things you have to dig into. So kind of learning from example from some awesome people, and then just it kind of took some years for me to finally learn this lesson. But the most valuable things that I gained were just being in those environments and like soaking up kind of some of the culture of like being culturally focused on problem solving, being culturally focused on like what is a good product, right? All of those things funnel into making good business. So yeah, there's a lot of hard skills that I learned. There's a lot of like relationships that I made. And man, on that note, that's probably some of the absolute most important things that happened. Like so at Giddy, there's about 6 or 7 of us that were there from like the beginning. And I've known these guys for almost my entire career.
Sure.
Like, we met some of them back at Team. And that's absolutely crucial to doing a brand new startup is having like really, really good team members. So yeah, that came out of those years being in the career field is, you know, creating a network of really, really talented people. Man, that's just insanely valuable. There's no replacement for having, you know, a crew of folks, you know, in your corner that can help you, you know, drive to what you're trying to solve.
Yeah, great advice and great knowledge there that it sounds like you gained over the years, Eric. So before we dive into the Giddy story, I want to back a little bit and talk about cryptocurrency because for me, I'm a noob. I'm the classic like Coinbase bought crypto at the peak and I'm down by 50% or whatever, you know. So maybe just help some of the listeners understand, you know, because I don't know, you hear about the blockchain, you hear about crypto, like what is cryptocurrency, what is a blockchain, you know, for dummies, maybe, you know, a minute spiel or whatever you can share to help us understand why it's valuable.
Yeah, for sure. So you start out with like, what is it? And in the underlying sense, it's a ledger. It's a list of transactions. And that might not sound all that like, you know, groundbreaking, but the big difference is that this list of transactions, this ledger, it's the same thing that a bank will do. Like a bank determines how much money you have based on how much money went in, how much money came out, right? Mm-hmm. Your paycheck goes to a bank and then you spend it. And the ledger, the list of transactions, adds up to how much money you have right now.
Yep.
And that bank, of course, it's regulated. There's a lot of history behind banking. They're relatively slow to adopt technology, but they do it because of risk mitigation. So it's not like the system is imperfect in every single way, but there are some imperfections. You're trusting someone else with this extraordinarily important aspect of your entire life. And also their motivations, their incentives, they aren't exactly the same as yours. They want to take as much money as they possibly can, lend it out, mm-hmm. earn yield on it. That's their whole business model. So your deposit at a bank, it might not actually be what you think it is. At any point in time, you try to go get all your money out. And there's a story recently of someone who went to a Wells Fargo branch. They wanted to withdraw, I think, like $13,000, and it was like a complete catastrophe. Like they didn't have the cash on hand at that bank, which is a whole thing. Like, should they have that much cash? Maybe yes, maybe no. It really is scary to think that like if you try to go get your money from a bank, you just can't. So right. You have all these private institutions keeping track of your cash for you. What the blockchain did, like its first initial initiative, the reason that it kind of exists, is bringing that out into the open, into the public. In a way that nobody actually owns. Like everybody owns it and also nobody owns it. So the big innovation was that they wanted to have this ledger, this list of transactions, AKA how much money you have at a point in time. They wanted to have that administered, tracked by everybody. So if you own a computer, you can help keep track of the accuracy of this ledger. And the way that system works is everybody who owns a computer who's tracking that ledger, their computer does the math to make sure the ledger adds up. And if your answers are the same as everybody else's answers, you know that you have a correct ledger. And if there's one guy or a group of people out there who are like, oh, actually, I counted it and I have $1 million today, everybody else can be like, nah, dude, we counted it and you don't, right? So you now have this ledger, this list of transactions, this keeping track of everyone's money. It's out in the public, it's out in the open. Everybody is helping to validate this ledger. And what it means now is that if I have some Bitcoin, if I have some money on the blockchain and you just help me, whatever, paint my fence. I can send you money on that blockchain. It's very, very fast. It's very cheap. And I have complete confidence that I have money to send you because this ledger is here. It's out in the open. There's not some other entity or whatever lending out my deposit, kind of like mucking around with that cash. And kind of the end result is a new, different system of money that is owned by everyone, but also no one. It's out in the open. It's completely controlled by you. You have this notion of a wallet, right? You have an account on this blockchain that only you can access, only you can control it, only you can send money from it. So it's kind of like a different way of looking at money that's mathematically, cryptographically, it's secure. Like everyone's computer together can say like, no, like absolutely for certain, this thing is accurate. It's totally safe. And that's kind of like the fundamental building block is I can send you money that I own, that nobody else owns. There's no third party mucking around. The transaction is instant. There's no takebacks like with credit cards and some other things in like the traditional financial system. There's ways of defrauding somebody by making a payment, but then claiming it was fraudulent and trying to like claw it back or whatever. There's none of that built into the blockchain system at its core. So really it's a new way of thinking about money where the people own their money. All of the transactions are out in the public. So you know for absolute certain what's happening. There's a lot more to it than that. And it's evolved since the earliest days, but what is a blockchain? What the heck is crypto even? It's kind of like a version of money that you own that you can guarantee nobody else is getting in the middle of. It's the transactions are pretty quick. They're immutable. Like you can't take back the money. And there's a lot of implications that stem from that.
Yeah, that's brilliant. I mean, when you explain it in that simple way, it sounds completely logical and makes all the sense in the world. I started my career at JP Chase, and I can tell you it is like archaic, like just a lot of their systems and how they process things and the KYC and just all of that stuff. And so, you know, I think the thing that I've seen, the headwind for crypto has been regulation, right? And government wanting to step in and be like, well, it sounds like right now it's in the people's hands, right? It's like people are being able to validate transactions in the ledger, but the government wants to step in. How has that been a challenge for your industry with government wanting to come in and regulate some of that?
Yeah. That's, when we started Giddy, I really didn't anticipate compliance and regulation and stuff being as big of it. I knew we had to do it, but it's taken up so much time and attention. And we've invested pretty heavily in our ability to be compliant while also staying true to like the fundamental principles of blockchain. But man, it's a big ball of wax. So there's a couple different competing ideas. Like when the Bitcoin white paper first came out, there's ideas in there about self-sovereignty and decentralization that some people kind of took those ideas and really wanted to make them fit into like what would you call it? Like, this is probably going to sound pejorative, but kind of like an anarchist's Disneyland, right? Like, oh man, now the government can go away. Now I never have to pay taxes again. Now I don't need a bank again or any financial rails or whatever. And there's certain ideas that are valuable there, but I personally have never viewed crypto as a way to abolish the system and totally uproot everything that we know. I think that there's a lot of inefficiency. I think there's a ton of money and people power that's being wasted. I think there's been more fraud with the US dollar than any other currency in the history of the world or whatever. There's certainly like a lot that we need to improve. And I think that crypto can help us do that. But I personally have never viewed crypto as a way to like, escape paying taxes or something. Sure. Right. I think that we can help society and help, it's kind of like the next evolution of technology for our economy. So what's been happening the last couple of years, for the most part, you have the SEC. They're really interested in controlling securities. If you put money into something and you expect the value to go up, there's a lot of things in that relationship. The person selling the product, the person gaining from it, the person who's like buying the product. There's a lot of things that need to be regulated because there's a lot of like corners that consumers can't see around. You can get hurt investing into something when you don't know all the details, and when the person creating a security is allowed to be whatever, they're allowed to mess around. And then you have the IRS really interested in making sure that income and gains and whatnot are taxed. You have the Federal Reserve that they're very interested in making sure that the U.S. dollar stays dominant on the world stage. And cryptocurrency at its core, you could argue, is a huge threat to the dollar. Like, it's another currency. Like, I can't just today go start printing little squares and call them like Eric bucks and try to like whatever, go to McDonald's and buy a half a meal or something like that. Like, it's illegal to do for a good reason. So they're looking at cryptocurrency and just like, you can't just supplant our entire currency. Like, what's going on here? So there's questions being asked around every aspect of our economy and government, and how it relates to cryptocurrency and what the blockchain enables. Right this second today, what we're looking at is kind of getting better definitions around tokens, whether they're a security or a commodity or a mix. There's a good argument to be made that Congress actually needs to step in and just basically make a brand new classification for what crypto is. Anyway, like I said, it's a huge ball of wax. I've spent the last 2 years like up to my eyes in these issues. But I guess kind of a way to sum it up is I've never personally viewed crypto as a way to subvert and delete the entire system. I viewed it as a way to make things just better. As an example, China and Russia right now, they're doing energy deals in Chinese yuan and I think the Russian currency too, rubles or whatever. They're actively trying to do more business outside of the U.S. dollar because they want to bring the brand equity of their currency into the mainstream. They want to. It's geopolitical power. If your currency is more valuable, you have a ton of negotiating power now on this global stage.
Right.
There's a couple of other examples of this, but there's this notion of stable coins, right? And it's a little bit of a I guess advanced topic if you don't know a lot about crypto. But a stable coin is just a token on a blockchain that's worth $1, and there's some mechanics in place that keep it worth $1. This is a very long way of saying that crypto could help the United States keep the dominance of the U.S. dollar. If you have a digital dollar that's available on the blockchain that everybody in the entire world can access, it's breaking down barriers that currently exist that are preventing people around the world from using a U.S. dollar, which they would absolutely love to do. It's a great store of value. It's been the dominant currency since, forever,
right.
A lot of years. Anyway, crypto and the blockchain and this technology can help evolve not only our economy, but specifically around the issue of the dominance of the U.S. dollar. We could issue a digital dollar and have it be available to everybody immediately with instant what do you call it? Well, the transactions happen and settle instantly.
Right.
So there you go. There's a bunch of stuff.
I mean, that would be incredibly helpful. We just closed on a real estate transaction. And I'll tell you, like, the amount of headache it is to wire funds from, first of all, getting all the capital in the one bank account and then going and closing a real estate transaction, wiring to escrow. If it could be instantaneous, if it could be without fees, it would be awesome. Is that something that's in development? I've heard that the Federal Reserve, or they're thinking about a U.S. Bitcoin or U.S. crypto dollar.
Yeah. So there's basically right now the debate around this is whether it should be done in the private sector or in the public sector. Should we just have the current companies who are doing it, who are basically private, or should we make it like a government issued? So there's this term CBDC, central bank digital currency. That's like the government issued digital dollar. Right now, there's a couple different stable coins, and like I mentioned, a stable coin is just it's a crypto token that's just worth $1, just 1-to-1. Mm-hmm. There's a company called Circle. Jeremy Allaire is their CEO. They're the issuer of USDC. It's a stable coin that's available on a lot of different blockchains. They've done an amazing job of making sure that the system is set up in a way that it's actually sustainable, that it's stable. They basically, when you put a US dollar into the system, you get one USDC out, and then kind of vice versa. If you want to cash out a USDC, you get $1 out. The USDC goes away, the dollar goes out, and then they're accounting. So they recently, who was it? Was it BlackRock? I think took over the US dollar side of it. There's around $50 billion being managed by like really reputable giant firms that are kind of like keeping the system going. So one thing that they're looking at doing is trying to get the USDC token issued by the Federal Reserve, which right now there's a relatively small handful of banks that are able to mint US dollars from the Federal Reserve. It's a highly regulated activity, and it should be. So one route to take is Circle, this private company, just like any other bank, being able to use the Federal Reserve to mint digital dollars. So it would go from this $50 billion reserve to however much money the Federal Reserve is capable of printing, which is almost infinite.
Yep.
There's some benefits to that, mostly around data privacy. They could do it in a way that you don't have to give up your information that's public on all of these transactions to everybody in the whole entire world. The government side, on the CBDC side, there's a lot of pushback around it, specifically around data rights and self-sovereignty of money and your privacy. It's kind of like the question of like, is cash legal? Should cash be able to exist? You could potentially do nefarious things with cash. You can go buy drugs or whatever.
True.
But do you have a right to like a certain level of privacy? So it's in the works. There's a lot of debate around it. There's absolutely a correct way to do it in my mind, where you preserve privacy, where you still get the benefit of the tech, but you don't have to give up all of your rights around self-sovereignty.
Sure.
So I think we'll probably see a resolution over the next couple of years. But yeah, it's absolutely being thought about and worked on right now.
Interesting. Yeah, that would be a game changer for sure. That's real interesting. So going back to Giddy, Eric. So why crypto for you though? I mean, so when did you start getting interest in cryptocurrency, and why go down a path to develop a wallet, platform for it?
So my first brush with crypto was back in 2011, 2012. I was working at BYU at the time, doing some software testing and some app development. And there's a couple guys who had been mining Bitcoins ever since it came out. Back when you could still do it on just like a regular computer with your processor. And I think Bitcoin had just reached like $3 or something.
Oh, geez.
Yeah. And they were just like, I have thousands of Bitcoin on a computer somewhere in a landfill. I can't find it, like, for the love of everything. They had like whatever, 10 grand worth of Bitcoin that they needed to get out, like literally thousands of Bitcoin. Right. So that was kind of my first experience with it. I remember talking to him about how they set it up. And at the time I was really interested in just the mechanics, like the technical side of it. So around 2011, 2012, I got a couple of like little Bitcoin miners. There were these little USB sticks that you'd stick into your computer. They got white hot. Like you'd have to get a fan and like put it on them just so they didn't melt themselves or whatever.
Wow.
Yeah. So from there, I built a couple computers to do Bitcoin mining. Around 2016 or so, I started doing Ethereum mining, and did it again in like 2017 and then 2019. So for me, it all kind of started with just being interested in the technology, like how the mining worked and how the consensus algorithm worked. That was kind of fascinating for me. I wasn't thinking about this being an investment, like a multiple decade endeavor. So I also too have some Bitcoin in landfills somewhere on those computers that I got rid of a long time ago.
Yeah.
So it was just kind of a really interesting technological thing. And I didn't really think about it. Like I thought about scaling up mining, right? Like you can make some money off of that. Which I actually did that in, I think 2016. I had a whole bunch of GPUs built that I was doing Ethereum with or whatever.
Cool.
And then around 2019, 2020, I learned about DeFi, decentralized finance. And the whole concept around that is it's based on the idea that you can write code, you can have that code execute on the blockchain. So with Bitcoin, it really was just doing one thing. It's keeping track of how much money you have. It's allowing you and me to send money back and forth. That's pretty much it. But you think about like what does a bank do? They have so much software that runs their banking system. The stock exchange, tons of software that runs that thing. Real estate transactions, there's tons of software that keeps track of that. So the next evolution of Bitcoin was Ethereum, basically. And they came up with this notion of a smart contract. Smart contract is just code that runs on the blockchain. So you think about like all these different software companies that have come up for the last like 30 years. What if you could write all of that code, and instead of having it on a private server, what if you can put it on the blockchain? Now everybody who has access to the blockchain can access whatever thing that you just built. One of the first products that came out was this notion of a decentralized exchange. So Coinbase, good example of a centralized exchange. They keep track of all of your information. They keep track of your keys for you. When you want to do a transaction, you log in, you ask them to do the transaction. They do it. They tell you the result. So it's a custodial service because they are the one custodying your private keys, your wallet. So a non-custodial, a decentralized version of that came out. Was it 2017? It was pretty early. Have you ever heard of this thing called Uniswap?
Maybe the name, but I'm not familiar.
Yeah. So it's like the biggest exchange that is solely built on the blockchain.
Okay.
So in other words, a decentralized exchange. We call them DEXs. So with this decentralized exchange, you could use your crypto account. You could go on there and you can trade between tokens now. So not only can I send money to somebody else, if I'm interested in some brand new token that just came out, I can get it on the blockchain without having to go to some intermediary, some centralized company, right?
Got it.
Okay, so I learned about all this stuff around 2019 or so, and I was just like, I know how to write code. This is so cool. I can put code on the blockchain and kind of like get started that way. Mm-hmm. And that was kind of my first real experience with kind of, what the blockchain can do for entrepreneurs for running a business. If you have a business model that is mostly based around financial services, you can put it on the blockchain and you get the benefit of this decentralized, trustless, global network of people and computers that is really powerful for scaling in a lot of ways. So I just got learning about that, and like I do, got obsessed. Was staying up until 2 and waking up at 7, and trying to do all these trades and just kind of messing around with it. And around that time, do you know Scott Paul, the Utah guy?
I've heard the name for sure, but what's he do?
Yeah, so also serial entrepreneur. He's had a couple exits. He sold the company to Disney and a whole bunch of things here and there. I think he's probably the most prolific angel investor in Utah.
Got it.
Like if there's a startup that you've heard of, he's probably the first check into it.
Sure.
I kind of heard about him. Lots of posts on LinkedIn. I remember at one point in time, before I knew him, I kept seeing this hashtag pop up on LinkedIn, Scott's posts. And I was like, who is this guy? Why am I seeing it all the time? So anyway, just prolific entrepreneur here in Utah. So I'm learning about all this DeFi stuff, totally nerding out about it. And do you remember, have you heard of this company called Volley?
Mm-hmm.
Yeah. Okay. So Josh Little, they were doing, so kind of like peak pandemic time, everything is becoming like remote. How do you communicate remotely? So they made Volley. It was kind of like Marco Polo for business, right? Mm-hmm. Like short little video chats or whatever.
Yeah.
So I found a group on Volley that was talking about crypto. I had to talk to someone about it. So I just got on there, just kind of like talking about these technical things that I was learning about, just kind of geeking out. And Scott reached out to me and was like, seems like you might know what you're talking about. Can I maybe ask you some questions? Turns out he'd gotten a whole bunch of money stuck on the blockchain. In one of these DeFi protocols, they had this migration from like V1 to V2, and everyone in V1, if you didn't like do some specific thing in time, your money was just stuck. There's no way to get it out. So I was able to help him recover that money, and just kind of through that process, we just got to talking like, why is this so hard?
Yeah.
And he was pretty early in this whole DeFi thing, so he's making a decent amount of money on it. He had a whole bunch of friends who were just like, help me do this. I want to make money like this. And he was just like, dude, you don't even know like what you're getting yourself into, right? Like this is super risky. It's really hard to manage. Like he was in it. He was good at it. And he got bitten by this like code thing that happened. Mm. So I helped him get that money back out. And we just got to talking about like, man, if we could make this easy for people, if we could just like find a way to scale this, like what a crazy awesome product. And at the time, DeFi was just exploding. There was huge amounts of growth. It went from, I don't even know, like 30 billion to 170 billion within the matter of a couple months, just going totally crazy. So that was like kind of the initial spark around the idea of, okay, there's this brand new technology. It's making people money. It's extraordinarily difficult to access. Very, very risky. The bits and pieces it's all code. So like, whoa, hold on, light bulb. What if we could write a bunch of code, make it all easier, and then help people access it where they couldn't have accessed it before. So that's kind of the original thesis for why Giddy existed, was this really cool thing existed. It was making people money. It's impossible to access, and is growing like crazy. The market was just exploding. So let's make a product. Let's make an app. And we were able to put a team together and raise money on that idea.
Yeah, I love that. So yeah, walk us through the first. So where were you working when kind of this light bulb went off and you were at Walmart Labs? Yeah. Okay. So yeah, walk us through the transition from Walmart full-time to quitting and going into Giddy. I mean, what was that like? Leap of faith, was that after you guys had raised money? Like, how did you have the guts to do that?
Yeah. A lot of it happened simultaneously. So while I was at Walmart, so like I mentioned earlier, I didn't actually finish college, right? Didn't have a degree.
Yeah.
Walmart was the only place where that even remotely mattered. They pretty old school.
Yep.
When you look at how that company functions, it's an HR company. It's not like a real estate or commerce or whatever. Like, it is an HR company. They have so many employees, and it's overbuilt. And of course, this is an oversimplification. But what it meant for me was, after my first year, I'm talking about like, I want to, what's my path to promotion? And one of the things they said was like, well, you don't have a degree, so sorry, you're kind of stuck. And I had worked my butt off that first year, like really, really trying hard to make a lot of progress and everything. So when that happened, I'm just like, why in the world would I go above and beyond for this company that's not looking to invest back into me? So the last, I don't know, maybe 6 months or so that I was at Walmart, I kind of like, I was sort of disillusioned with like working my absolute butt off for this company that didn't really want to invest back into me. And that's kind of when this DeFi thing popped up. Like I mentioned, I was staying up until 2 a.m., getting up at 7. So fitting in my day job while doing all this crypto stuff. And I just couldn't put it down. I was absolutely obsessed. And I got lucky. I made some money, lost a bunch of other money. But so Scott Paul was our first check in. And he actually invested in crypto. He invested in this currency called Cake Token, which is just a hilarious story in and of itself. Like we got crypto from our first angel investor on this totally alternative blockchain, and just made it work. Figured out a way. So the original idea kind of evolved a little bit. At first, we started doing coaching. Like, we would get on a Zoom call with people and help them like click buttons in the old way of doing it to kind of like get them up to speed. Doesn't scale. It's not a great way to make a tech company. And kind of through that experience, we put together this idea. I kind of like was just watching how the tech was evolving, and we finally got to a point where we could make this thing happen. And I was like, man, there's a path forward. I totally have a vision for how this is going to work. Like, let's raise money. We hadn't really been serious about raising a lot of money. We just kind of were still trying to, tinker. So, oh man, over the course of maybe this is like a 2-month-ish process, we found some angel investors who kind of were ready to jump in. Those angel investors kind of helped, stoke the flame for like bigger institutional investors. And it took about 3 months or so, but by the time we got our first big check in, I think, I'm trying to remember exactly. I put in my 2 weeks notice a little bit before we actually had the money in the bank, as well as 5 other people who I'd known from previous jobs. Like we had this idea, we had some traction, with pitching investors and stuff, and a handful of us jumped in before we even had money in the bank.
Wow.
Just because this confluence of factors of you got the right team, you got the right tech, you got this market that's going nuts. There's a lot of interest from investors in getting into this thing. We're all pretty confident in our ability to execute. So
right.
Yeah, we a handful of us quit our jobs and started working on this thing full time before we even had money in the bank. And then it took 2 or 3 months longer of negotiating and pitching and stuff to get like our first really big seed investment in. But I think it's so the 4 or 5 of us that started it from the very beginning, all of us had pretty long careers. We've been doing this for a while. You get pretty used to risk when you've been working at startups. Like, so a startup runs out of money and like that's it, or a startup exits and that's it, or they're floundering. You just want to go somewhere else.
Yeah.
So we were all pretty much at a place in our lives where we're ready to just we want to do our own thing. We're pretty used to risk. We have a really good reason to believe that we're going to actually like land this investment. So there was I don't know, maybe 4 or 6 weeks between us like quitting our jobs and starting this thing and actually like having some certainty that we're going to get money in the bank. Definitely a leap of faith. And you have to, like, if you're pitching investors that you're going to go all in on this thing, you really have to show that you're going to go all in on this thing. And I think that was a big item that helped. We had a lot of very experienced people who wanted to start this thing who were just ready to dive in. Yeah,
no doubt. It's amazing. So was that different than the $8 million seed round that I read about?
Yeah. So that was our
the
initial.
$8 million.
Yeah.
Got it.
All in all, between the Scott's initial investment, some other angels, and then some institutionals, that was their first $8 million seed round.
And that was a year and a half, 2 years ago ish, or when was that roughly?
End of 2021.
Okay. End of 2021. Okay.
Yeah.
So you guys are call 18-ish months in, coming up 2 years. So how did you guys go? So you raise $8 million. Were you able to, I mean, just get into the weeds a little bit, but it's like, what do you do with that $8 million? You know, it's like, is that for covering overhead for you guys so you can, you know, eat and feed your families? I'm sure it's part of it. Is it developing the code? Like, how did you guys take that and be like, okay, how do we be smart with this capital?
Yeah. So at the time, markets were just exploding. Like we really felt like we had to move very, very, very quickly. So we had a good idea of the product that we needed to build. We knew that we needed just extraordinarily good engineers, just really smart people to build this thing and to get it done quickly. So the first phase was basically scaling up the team. And thankfully, I guess luckily, whatever, most of my network is engineers. The people that I know have done really extraordinary things as programmers and as managers of software teams. So those were the first people that we looked for, were just these stellar, phenomenal, psychotically good engineers. And I still feel just absolutely crazy lucky that we were able to bring these people onto the team at all. So our first goal was find people to build a product, and those people who are that good, the whole comp package needs to make sense for them to leave their previously also very good situation to come here. We also brought on head of marketing and then CFO, chief of compliance, pretty early. We wanted those things to be on lock. So for the most part, where we've invested is people to write code, build the system, and then also your typical multi-channel marketing efforts. That's a whole big can of worms by itself. But yeah, that's pretty much where most of the investment has been, is people to write the code and then figuring out distribution.
Got it. Makes sense. Yeah. So how was year one? I mean, how has it been the last 18 months? I mean, I've looked at the website. It looks incredible. I mean, you've got great video that explains what you guys are doing, and it's all clean, looks awesome. But I mean, how has it been? I mean, has it hit expectations, challenges? What's it been like?
So basically we started at what was apparently, now that we have the benefit of hindsight, kind of the peak of this DeFi cycle. So we've been able to, get a bunch of users. The plan that we had, the first initial product, which is making access to DeFi yield really easy, built that, shipped it. That market has retracted considerably since we started. So even through, you probably have heard of some of these things that have happened, like FTX collapsed.
Yep.
There's a couple of other things in there that happened where that might not be as easily accessible to people who aren't just obsessed with it like I am. But there's this thing called Terra Luna that collapsed. There's this other thing called Grayscale Bitcoin. There was a whole bunch of leverage built into this system that over the course of, it was basically overnight, in about a month, maybe more, we had, I don't know, 50 or 80 billion dollars just vanish. So
wow,
a couple things happened that caused a whole bunch of leverage to to just collapse. And it was a pretty quick descent from these totally insane growing markets to just a huge, massive retraction from where it used to be. So that original idea that we had, this easy to access DeFi thing, the reason that we were building it is, for one thing, it didn't exist. Like if you wanted to get DeFi yield, you had to do it on your own, and it was just extraordinarily hard. It didn't exist, and that market was just exploding, just growing like crazy. So it's a perfect thing to invest in with a growing market, without a lot of other, people without a lot of other companies who were able to compete because it's so technically challenging. It made all the sense in the world at the time to go full steam ahead on that idea. And if the DeFi market had continued to grow, we would have been positioned just absolutely perfectly. But the DeFi market specifically retracted like crazy. So what we're kind of looking at now is these new use cases that we thought were going to continue to keep growing and just getting better and better. They're still there. They're still, pretty good, but they're not doing nearly as much volume, as much business as they used to. So crypto right now, for the most part, people are looking at just, I want to hold Bitcoin, I want to hold Ethereum. It needs to be easy to buy. And then occasionally I want to just trade in some other tokens. That's kind of the same use case that we saw evolve in like 2016, 2017. Yeah. So since we started, the market has just been crazy rough. So we've had to kind of just, pivot isn't exactly the right word, because what we built foundationally is brand new technology that works with any blockchain. One of the biggest innovations that we did was the ability for you to custody your own crypto, kind of like what we talked about earlier. If you wanted to get your crypto out of Coinbase, where do you put it? It's called self-custody. You're managing all that tech and that risk yourself. Yeah. So we built a system that allows you to custody your own crypto, but make it a lot more secure and make it recoverable. So if you lose your phone or if you lose your password or something, you can still get your crypto back because of this thing that we built. It's absolutely our biggest technological edge innovation, like on the market. So with the DeFi market retracting, with the technology that we built, we're looking at how do you find product market fit with all these changing factors around you, which is, man, that's basically the question that every entrepreneur for every startup ever is constantly thinking about. You have to find product market fit, and then once you do, it's a constantly evolving thing, but you can scale it. So this original idea, this original product, it's still pretty good. It's still okay. It's retracted like crazy from where it was. So how do we take what we've built and leverage it into the best possible business, which is still kind of an ongoing thing. Like we're still experimenting and gathering data, and with almost 2 years under our belt of building the product and doing this, we have a really, really good idea of what people need and how we can fit in the market. But it is a constantly evolving challenge that you have to look at, especially in something like crypto, as volatile as it is, and I guess the financial markets in general. But it's an ongoing process. Yeah, it sounds like it. I mean, and we mentioned this earlier, but being able to adapt, change, and market, and being in real estate too. It's like we started a year ago, and since then it's just been higher interest rates. Yeah. It's like it's tough, and you've got to be able to be able to adapt and survive and thrive. So I totally have respect for that. I did want to ask, so with your guys' platform for people like who are retail investors in crypto. Maybe they have Robinhood or Coinbase. You've talked about the decentralization, being able to custody your own assets and crypto. But like, if I download Giddy, what would I, as a retail, investor in crypto, not knowing all the nuances, what's kind of like the one or two things that would be beneficial for me if I downloaded today and wanted to transfer my crypto over to Giddy, as opposed to like a Robinhood where I have $300 in Bitcoin right now? Yeah. So getting your crypto off of centralized exchanges is one of the biggest benefits. That whole situation is kind of colored by what happened at FTX. So FTX was an exchange kind of like Coinbase. They were centralized and custodial. What ended up happening there was they had just enough wiggle room, just enough gray area, like with regulation, that they were able to basically do a bunch of illegal stuff with user deposits. So the money that you were sending them, it wasn't your money. They weren't just like holding it and letting you do whatever. They were lending it to other people. They were using it to buy a bunch of businesses. They were levering it up. The fundamental issue was that these user deposits that were supposed to be for one very specific purpose, which is you don't touch them, period, were being sent all over the place. And that eventually is what led to them just collapsing. So if you don't want to trust somebody else to manage your money, you don't have to. The way you do that is with a self-custody wallet like Giddy. So that's kind of thing number one. If you want to own your own crypto, you have to do it in a self-custody way.
Got it.
And the other solutions on the market right now, for the most part, you have to write down a seed phrase. Are you familiar with a seed phrase, private key? Yeah.
Right.
So you have to write down these 24 words. It represents your wallet. It actually is literally the same thing as a private key. Private key just means that like, it's the same concept as a key for literally anything else. Like if you just kind of imagine, your house in the kind of a simplified way, whoever has the key to the house gets to go in, and for all intents and purposes, you own that house, right? Mm-hmm. Same thing with your car. If you have a key to the car, you get to drive it around, you might as well own it. So your key to your crypto wallet is what allows you to spend money out of it. If you have that key, you own it. You get to do whatever you want with that money. So the seed phrase represents your key, and most wallets right now make you write down a seed phrase. And if you lose it, the money is gone. If someone else gets it, the money is gone.
That's crazy.
It's how these computers end up in the landfill with a bunch of Bitcoin on them. Like they had the private key on their hard drive, and if you don't have physical access to it, you don't have that money anymore.
Right.
So this notion of managing your own private key, it's very risky. It's very difficult. We make that extremely easy. You log in with an email. You do like a Google Authenticator app. You can like put a backup password in there if you want to. There's a couple factors that you have that represent this seed phrase. So it's abstracted away. It's made so much easier by basically like account recovery that you're used to. Like if you wanted to recover your Twitter account or something, you can do that same kind of thing with Giddy, with your self-custody funds. So that's thing number one. We make self-custody crypto possible. Not only is it easier, it's much, much safer, and it's recoverable. And it's all done with technology, with cryptography that is decentralized, that we don't own. Like the company never gets your private key. It's impossible for us to access it the way that the system is built. And we did that intentionally. We never, ever, ever want to be custodial. And then on top of that, there's other services that you can get into, like DeFi. Still today, even though the markets are a lot lower than they used to be, you can still earn pretty decent yield, like 6, 8, 10% on your Ethereum if you want to. There's a bunch of other assets that you can earn yield on. So we've done integrations with these DeFi protocols that make it really easy for people to earn yield on their crypto. We've also done a bunch of integrations with like bank providers. You can buy crypto with your bank account. You can sell crypto with your bank account. You can buy gift cards with your crypto. So if you this is one of my favorite things to do. Literally, my family does this all the time. I'll earn some yield on the blockchain and then take those dollars and go buy like a DoorDash gift card. So if we want to just whatever, don't feel like making dinner or whatever, crypto yield is literally like buying DoorDash for me, like, weekly.
That's nice.
Anyway, there's a bunch of other features in there, but it all revolves around the difficulty and the importance of self-custody crypto. We solve that problem with technology. So now it's a mobile app. It's a iOS and Android app that anybody can download and use. And it makes crypto a lot easier, a lot safer, a lot faster, a lot more secure and recoverable. So you're not totally out of luck if you accidentally misplace, one of your recovery factors or whatever.
So good. Yeah. I've, like early, I don't know when it was 2017, 2018, I bought some Bitcoin, swapped it for some, I can't remember the name, but I dabbled in some of these swap, like interchange pancake swap things for a little bit. And it's so, the keys and the tokens, and it's like, I don't know what, like if there's a way to make it easier and digestible for retail investors, I think that's great. So it sounds like you guys are doing a great job with that. Well, last couple of questions, Eric, and we'll wrap. So I guess just for Giddy, you talked about some of the challenges and where you guys are going, but what do you see for Giddy over? I mean, you're about 2 years in. You've raised $8 million. What do you see for the next 5 years? I mean, do you anticipate more capital that needs to be raised? Do you anticipate transitioning away from what you're doing now or pivoting even more? What are you thinking for the next few years for you guys?
Yeah. So I think in the next couple of years, there's going to be consolidation in the market across wallet tech. Right now, I have a couple dozen wallets on my phone, right? There's so many wallets and like options for people to get into crypto. I think we're going to see a consolidation down into a handful of brands, Coinbase and Robinhood, and maybe even like JP Morgan, who knows? But people are going to want to get into crypto with something that they trust. So for the entire system to scale, we need to have technology and brands and stuff that are accessible. And because that is the case, what we've built, like some of our most valuable tech is this like private key recovery stuff. So I think an amazing path forward is finding basically channel partners, like ways to distribute this tech through bigger brands that need to solve this very specific problem of private key security and recovery. I think in the long run, we probably are going to distill everything that we've built into one of a couple things. There's a couple of other technical things that we built that make it a lot easier to do crypto stuff. As an example, when you are doing a crypto transaction, you need to pay what's called gas to make the transaction go through. Like you have to pay a little bit of money on the blockchain to make it work. On some networks, it's really, really cheap. Like on the Pelion network, you can send money to somebody else for like half a cent. It's almost nothing, but you still have to pay something to make it go through. We've made a system where you can pay gas in any token, which normally you have to pay gas in the token that blockchain represents. Is called like a governance coin, right?
Got it.
If it's on the Bitcoin chain, you're paying gas in Bitcoin. If it's on the Ethereum chain, you're paying gas in Ethereum. So we've made a way that you can pay gas in any token that you hold, which is a huge advantage in terms of ease of use. There's a couple of other specific things that we built on the infrastructure side that could be a really, really good like B2B play, right? So for us to scale, like, yeah, it'd be amazing to become one of these brands that's trusted by everybody. You know, the Giddy wallet is in everyone's pocket. It's what everybody uses. I think there's some pretty good paths towards that. And we've been able to, acquire a lot of users and kind of prove that we have those chops. But, one other potential play is kind of like this B2B route where we find a way to license the tech, or maybe there's distribution channel partners. There's a lot of options available to us, which is great. I love having a lot of options. Whatever the best thing is for us to pursue, in a given time frame, it's nice to be able to have multiple things to compare it to. But I think that as the crypto industry grows and scales, it'll be because of consumer-facing technology. It's kind of like the last mile problem that you face with. I don't know if you remember when who was it? There was like a fiber network that got laid between Orem and Provo. Google Fiber came in and like bought it, but the cost of bringing that fiber to everyone's house was so immense, was so extreme that they kind of like had to change their plans. That's the last mile problem. Is you have this massive network, but how do you get every single individual connected to it? That costs as much, if not more, as making the network itself. So we are trying to solve the last mile problem for crypto. For the end user, and it's a huge lift. There's a lot of potential there, but so the next 5 years or so, we're still going to be focused on the end user and bringing the power of this system and this technology to everybody in a way that's useful, that makes sense, that's easy, that's safe. Anyway, there's a couple of paths to get there, but we're definitely focused on the consumer, on the end user, and providing a bridge to the technology.
Yeah, I love that. So, it sounds like you guys have done a ton of legwork on the upfront side with developing the technology to be able to have some of these options, whether it's B2B or continuing to go to the consumer. So I think it's great. Really excited for you guys. Last couple of questions, just in terms of advice that you'd have for an entrepreneur, someone who wants to start a business and they're not sure what to do or how to do it. It's a broad question, but like, is there anything that you've learned over the last few years that you'd be like, hey, this is one thing that entrepreneurs should know?
Yeah. It's kind of I guess, funny way to put it, but everything that you hear that's like cliche is just so true. Get out of your comfort zone. I have been nothing but uncomfortable for the last 5 years.
Yeah.
I'm constantly testing stuff and trying stuff and trying to meet people and make new connections and new relationships. The first really big institutional facing fundraise that we did, I had to learn just an immense amount in a very, very, very short time frame. And what it means is that you're going to be faced with situations that you've never seen before. you're gonna fail. There's gonna be times where you don't get the result you're searching for, but you have to look at it as kind of a numbers game. Almost like the way that you succeed is by failing more than everybody else. You have to be comfortable enough with putting yourself out there, with trying again and again and again, because that's how you learn lessons. And the way that I'm built, this is just kind of the way that I've always learned, is kind of by trial and error. Like you try to get your mental model correct by learning as much as you possibly can, but that can only take you so far. You just have to start doing it, and doing it is often quite uncomfortable. And you just have to get used to the notion that it's not going to go smoothly a lot of the times, but once you've earned kind of your stripes, like the reason that it ever does succeed or ever does go smoothly is because you've earned your spot there. Is because you've seen it go poorly enough that now you can finally like tweak it enough to make it go right. So yeah, those cliches about like get out of your comfort zone and just try stuff, they're true. Like there's kind of this notion that, being an entrepreneur is not a career or a job, it's a condition, like you kind of can't really help yourself. So for the people who have that bug of just wanting to make things and create something and tinker and make a cool product and, find a way to make a good business out of it, the only path forward is just doing it. And whether you think it's small scale or big scale or whatever, it doesn't really matter. Like the pattern and the format is going to be the same, whether it's a tiny, tiny product that makes $10,000 versus a massive company that makes $1 billion. Obviously there's going to be some mechanical differences along the way, but the pattern of finding a good product market fit, getting a good customer, treating a customer well, iterating on where the value is, that's going to be true no matter what. And you can do that on a tiny scale and kind of like learn to build up as you go. The other thing that I would say, and this is kind of much more recent, I'm talking like in the last like 3 or 6 months, use AI. If you're not using AI, use AI. You got to use AI.
I love that.
It's outrageous. The kind of things that you can bootstrap in like a weekend, outrageous. So like my whole career has been in programming, but like if I ever have to go write a snippet of code, the first place I go is to chat GPT.
Yeah.
I use GPT-4. I'm on the pro thing, so I have a couple of like add-ons that I use where it can search the internet and it can do some pretty cool stuff for you. Oh, just use AI. Like you go to ChatGPT and you say, I have this problem. I want to solve it this way with these kind of parameters, like write some code for it. And the code that it outputs usually takes a little bit of work, but it works. It's good. Like you can massage it and iterate on it. But like it's as far as like laying a foundation, laying a starting point for solving a problem, generative AI is such an amazing, outrageously good tool. Same thing for like, creating ads, creating like marketing copy, standing up a website, like you name it, generative AI can help you do it faster. So, and for a lot of people, that's going to be one of those things, one of those comfort zone things. It's kind of a deep, like to really get to the underlying mechanics of what's happening in generative AI. It's kind of a deep subject, but the products are accessible enough for almost anybody to go mess with it. So, advice for whoever's looking to build something: tinker, try, iterate, get uncomfortable, get in front of people, get feedback, and absolutely take the shorter path of letting generative AI do what it can for you. Generative AI is not good at like finding product market fit, like the human to human relationships that help you create value. Generative AI can't really do that, but it can absolutely help you find shortcuts. Once you have a good idea of the direction you're supposed to go, it can help you get there. It can help you optimize. So yeah, try stuff and learn about AI. Let it like speed up that process.
Yeah. Both great pieces of advice, Eric. And we're trying to implement more AI in our real estate business, which is very much an old school, gray hair type business, and trying to understand how we can shortcut things, how we can, be more tech savvy. So I love that advice. I think ChatGPT is just a wealth of knowledge and fast tracking a lot of the the redundant tasks that you have to get done. Last question for you, Eric, we'll be done. When you think about success in life, how does Eric Parker think about that? Maybe in all kind of from a broader scope of view, how do you define a life well lived or success? What are you really trying to accomplish?
Yeah. Super good question. So I have 2 kids. They're 7 and 5. They're just awesome. And they're at a stage in life where, they still like their parents for the most part.
Yeah.
Being able to spend time with them is a huge, a huge goal. Being able to spend good time with them is a huge goal, right? I kind of view all of these efforts, career, entrepreneurial, otherwise, as a way to support what I really like to do, which is, hang out with my kids, hang out with my wife. For me personally, it's all about like, just having a handful of really, really good connections to just really, really good people. I'm definitely a personality type where I tend to keep smaller circles, a few people who I'm like really, really close to. Obviously, still enjoy getting out there and meeting more people, and it's an amazing way to grow a career and grow a business, is connecting and networking. But what I really want out of life is be able to have a good connection with my kids, with my wife, my immediate family, and a couple friends and more family members outside of that. But like there's like the me focused things, which just so happen to coincidentally be entrepreneurial focus. Like if I have a spur moment, I'm almost always tinkering with something. And then there's the people connection side of it. So, I view wealth accumulation and, comfortability as far as just like money and stuff as a means to a much, much, much better end. I want to do something valuable for people. I want to do something that's interesting to me, that has intrinsic value. And for me, like, money in and of itself isn't intrinsically valuable. It's a tool to get to the end of those more meaningful things. So anyway, there's a lot to be said about that. But what I love doing at the end of the day is seeing my kids do something interesting and connecting with them, and my career and entrepreneurial efforts and stuff. So they all go to support that.
Yeah, such great advice and a great way to end. Thank you so much for being here, Eric. This has been great to hear your story, great to hear everything about Giddy. And for those listening interested in crypto, please go check out Giddy and download the app. So again, thank you, Eric, for the time. Appreciate it.
Yeah, absolutely. Thank you so much.